QuickBooks Online 2025 Employee Payroll Process. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody. Looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. We're going to be choosing the United States version of the software. Verify if you're not a robot if you need to. Going to close the prior tab because it's no longer needed. We're in the sample company file, Craig's Design and Landscaping Services, opening the major financial statement reports as done every time. The report's on the left. We're in the standard tab, in the favorites, right-clicking on the balance sheet to open a link in a new tab. Right-click in the profit and loss to open a link in a new tab. Let's tab to the middle. Close the ham boogie. Change the range to that 2-year time frame. 01/01/24 tab, 12/31/25 tab. I want to see it in format of years. Run it to refresh it so that the year of 2024 and 25 are now side by side. Go into the right side of the tab side so that we can do this again. The hamburger, once again, needs to be closed. You got to close the hamburger and then range in it. 01/01/24 tab, 12/31/25 tab. See it in terms of years. Run it to refresh it. Noting that there's nothing currently in 2025 except for that $53.99 for some reason, including we have removed prior presentation transactions because we want to keep it as clean as possible as we go forward. We recommend you do the same thing, possibly logging out, logging back in. We're using incognito window so that it doesn't bring in the cookies. Let's go back to the first tab. What we've been doing recently is going into the plus button here, looking at cycles within cycles within cycles of the accounting cycles, which we can think of in terms of time frames, like years versus quarters versus months, for example. And we can also think about it by process. That would be the customer cycle or revenue cycle, vendor cycle, or payroll or expense cycle, and then the payroll cycle. And then within each of those cycles, we have the journal entries that are typically generated with the help and use of the forms. So this time, we want to look at the payroll cycle. Now, the payroll cycle is unique in many ways. And so we want to, every time we touch on payroll, just think about some of the ways that it is differentiated and will be dependent upon the type of industry that we are in. Also noting that if you are a bookkeeper or an accountant, you want to remember that payroll is a specialty area in and of itself. So how are you going to put payroll into your bookkeeping system? A few ways you might think about it. Do you want to pick up clients that don't have payroll because possibly they're smaller clients and you're doing like Schedule C tax preparation for bookkeeping for taxes or something like that? Or you might want to come up with a system with payroll that you're working with payroll specialists, possibly outside of QuickBooks, and they're gonna handle the payroll. So you create a network as your go-to system. Or you might want to pay extra for the payroll within QuickBooks that's going to give you the support so that you can do the payroll with the added support. Now, another option would be that you don't buy the added support and try to do payroll manually, but generally wouldn't recommend doing that in the United States, even if you only have a few employees, because payroll is quite complex, including things like withholdings and also other regulations. And unfortunately, you're most likely to run into legal processes and problems with your employees. So you want to be really careful on how you're processing the payroll. Obviously, be careful on who you're bringing on board as employees because it does have liability related to it and so on, and track everything as nicely as possible. So a couple things to think about on the payroll side, just as we go into it. Note that if you're a small business and you're growing, how can you grow? What are your options for growing? You want to bring in more people. Well, if you want to bring in more people, you could hire people, or you can take on contractors maybe, or you can take on partners, right? Those are kind of your options, some options for expanding, all of those having pros and cons. So you want to keep those in mind. What's the difference if you bring in a contractor versus an employee? Note that in the United States, there's going to be legal differences between a contractor and an employee. And remember that the government is always trying to get you to be an employee normally. So if you're the owner of the business, remember that the IRS is going to try to label your people that work for you as employees. Why? Because they want to make you into their tax collector. That's the point. So if they are the employee, you are responsible then to withhold the money from the employees, which is good for the IRS, right? So they want to incentivize that structure typically. So that means that if you want to hire someone as a contractor, you got to make sure that they qualify as a contractor so that if the IRS comes after you wanting to say, hey, they're an employee and therefore you're responsible for collecting the tax revenue and giving it to us, then you have to make sure that that's the case. And normally the rules and regulations with that would be, do they provide their own tools? How much control do you have? If they're there on a 9-to-5 job, it's possibly their employees. But if they have more leeway to basically have their own means, their own hours, their own tools on how they're going to create the end product, then it's more likely that they would qualify as a contractor. So there are pros and cons to whether someone's a contractor or an employee, but by far, if they are a contractor, it's a lot easier because you just pay them as basically under the vendor cycle. So you want to be careful with that categorization, but that's the first thing to note. What's the difference between an employee, a contractor, or a partner? If you're a sole proprietorship, you might say, hey, look, I'll pay you part of the equity, the revenue of the company. In that case, you're taking on a partner. And if that happens, then of course you don't have to pay them payroll, and you don't have to deal with even paying them as a contractor, but they might get a share of the revenue in some way, shape, or form. And you have to be very careful about that, because even if you're their family member or something like that, a partner, usually people don't have the same objectives. So if you don't write down a good partnership agreement, then if you have problems with your partner, it's going to be difficult to break up a partnership agreement in that situation, because you're giving up some of the equity, some of the control in the business. So those are kind of the pros and cons a little bit of the partnership. Now, if you have payroll, then what are your options for doing payroll? Well, you could do it by hand manually, but we don't recommend doing that in the United States because it's quite complex. Or you can outsource payroll, possibly to some external person that's doing it outside of QuickBooks. The major two big ones here are like an ADP or a Paychex, for example. Or you can pay more for QuickBooks to assist you to do the payroll internally. Now, there's a whole bunch of factors on payroll as to how complex payroll will be. One of those being, how many locations is your business in? Because in the United States, for example, there are federal payroll laws and then there's state payroll laws. So if you have to deal with multiple states, then that's going to make it more complex. If you're in one fixed location with one employee, then that might make it a little bit easier to deal with the payroll. So let's go over here to Intuit just to give you an idea of how the payroll ties into QuickBooks. If I'm in Intuit.com, Intuit's the owner of QuickBooks. I go into the QuickBooks item here, and then I'm going to go all the way down to the bottom so that I make sure I'm in the online. So this is where the products are. And then I'm going to go into QuickBooks Online. And you'll note that when you purchase QuickBooks here, this is the normal QuickBooks Plus. Notice it doesn't often, at this point in time, I don't believe it has much with regards to payroll in this information here, which is a little kind of deceiving, although at this point, I think it's kind of just assumed that you're going to have to pay extra for payroll, typically, at least if you're in the United States, because of the complexity of it. So you can think of it as kind of an upsell type of thing. What's going to happen when you buy the software? It's going to ask you, do you want payroll? And if you do, it's going to upsell you, right? Which is usually kind of a sneaky thing that I don't really like. But again, with payroll, it's just kind of assumed, I think, that that's going to basically be the case. So you could go down and say, let's go down to the bottom here and go, all right, let's go to the payroll item and look at payroll and read up on payroll here. And then you can see the plans. Let's see the plans for payroll. So payroll core and essentials. And then you got the payroll plus and so on. And these payroll options will help us, hopefully, to do all the processing needs with payroll, which we'll talk about shortly. So you typically are going to want to have assistance, because if you get something wrong with payroll, it causes problems. And let me just point out that payroll is one of those things. There's when you're learning things, there are two ways to approach a problem typically, if we break it down into its simplest form. One is you go at it, you attack it, and you just tinker with it until you perfect it, right? It's like if you're trying to fix a puzzle or a Rubik's Cube, you just tinker with it until you get a little bit closer, and then you kind of figure it out. And that's great for some things. Other things, you don't want to do that. You want to study up and go into it and do it right the first time. Payroll is typically one of those second things. It's kind of like if you're cutting out a piece of wood to fit in a door frame, you want to make sure that you measure it properly before you cut it. You don't want to sand off the edges little by little, and you certainly don't want to cut the door too short and have to glue it back together, right? So payroll is one of those things where it's way better to get it right the first time, because if you have to go back and fix payroll, it's a pain. It's like trying to glue the door back together. It's kind of a messy situation. It's possible, but it's ugly. So that means that you typically want to have assistance with it, and that assistance will either be you have an external payroll provider, or you pay extra to have payroll help you process within the system. So that's going to be the general idea with payroll. Now, also just realize that the other thing that's interesting with payroll is really it should just be part of the vendor cycle, right? It should just be something that you're paying for goods and services. In other words, normally it used to be at one time that before they bogged us down with regulations that are just insane, you could say, hey, do you want to work for me? And you shake hands, and then you pay them for the work they do at the end of the, right? And that would be just a normal vendor process, right? There wouldn't be any crazy stuff that you have to do, right? But because of the laws and regulations, including withholdings, we have a whole specialty field that has grown out just to deal with the complexities of payroll. So that's the idea. Now let's go over to the flow chart just to get a thought process of this, remembering this flow chart is on the desktop, but we're just using it to look at the flow of the forms to get a general idea of the process for the payroll. So we're down here in the employee cycle, and we're using QuickBooks Online. I'm just thinking about the normal cycle of payroll and how we can basically deal with it. So when we have payroll, the first thing that you set up payroll, you have some general options in terms of the time frame. Payroll is going to have its own cycle. So we have the accounting cycle that's on like a yearly basis, a quarterly basis, a monthly basis. But payroll is going to have its own cycle. And because payroll is so complex, we're just going to let payroll have its own cycle. And even if it doesn't correspond to ending at the end of the month, ending properly at the end of the year, we'll deal with that later. We won't mess up the payroll cycle because it's complex. What's the payroll cycle? Well, we normally pay people either weekly, or we pay them every other week, bi-weekly, or we pay them semi-monthly on the 15th and the 30th of the month, or 31st, or whatever, or we pay them monthly. Those are the general, most common payroll cycles. You possibly could think of others, but the system of payroll taxes has almost restricted us in many ways to use one of these kind of payroll cycles, and which is another problem of too much regulation. You can't get too inventive with other kind of incentive strategies because they locked them in with these laws and regulations. But so once you have the payroll cycle in place, and if you're using QuickBooks, choose the payroll cycle within the setup process. By the way, we have a whole nother course or section on payroll. We're going to touch into payroll in this course, but we can dive way more into payroll. Again, it's a whole specialty area in and of itself, and the complexity will be dependent on how many employees we have and the complexity of the locations and so on and so forth. So then that means that if we pay them every week or every month or whatever, then we're going to process the payroll, let's say on a monthly basis, right? So if we process payroll on a monthly basis, that means every month we're going to have to pay the employees. So normally if it was a vendor cycle, we would just write them a check. It would be easy to do, but the IRS also wants us to withhold. So that's part of the problem with employees. The IRS is going to make us into their collection agency. So how do we know how much to withhold from the employees? Well, that means when the employee signs up, we're going to have them fill out the W-4 form, which is going to approximate, in essence, how much taxes they're going to pay in income taxes. And then they'll use the tables and whatnot to figure out the withholdings that we will have. And then that'll help us with the federal income tax withholdings. And then we also have to withhold Social Security and Medicare, which are more flat taxes, therefore easier to calculate. And then we also might have state obligations that we have to deal with as well, like a state income tax and other taxes. And we might also have voluntary withholdings, such as benefit programs, like a 401k plan that we can possibly have, or a cafeteria plan, some kind of healthcare plan, and so on and so forth. We could also have other random things, like if there was someone had an ex-wife or an ex-spouse or something, and the court said that we need to garnish their wages and take the money directly out of their paycheck and pay it to their spouse or something. We'd have to deal with that kind of things. And it's just like, why do I have to deal with that as the employer? I'm just, that's it. That's the employee's problem. What am I doing? Yeah, right. And that's the problem with being the employee, with being the employer, because again, the government tries to make you their enforcement arm, right? So whereas if they're a contractor, that's typically not the case, right? If they were a contractor, then it's like, dude, that's their taxes. What do you want me to do? And well, you have to give us a 1099. They'll say, okay, we'll give you a 1099 to rat them out, to tell them how much they earn, but at least they don't force you to actually take the money from them and be the right, because that becomes a lot of work to do, and so on and so forth. So we have to withhold. So that means when we pay them, we're actually only giving them part of the money that they earned. And we're going to have to pay our portion of payroll taxes, which is kind of a matching program of Social Security, Medicare, and FUTA, Federal Unemployment Tax Act. And then those withholdings that we took out of the pay are going to have to be paid at a later date. This is an accrual component that we have to deal with rather than a cash-based system. So if we're doing this within QuickBooks, QuickBooks is going to force us to do this accrual thing of basically withholding the money, resulting in payroll tax payable and incurring our taxes at the point we process payroll. And then we'll have to pay the payroll taxes to the government, which includes Social Security, Medicare, and federal income taxes, not our federal income taxes for the business, but the employees' federal income taxes that we withheld on their behalf because the government forced us to do so. So that's going to be the normal process for the payroll. But then we're not done there, because then the government wants to enforce us and make sure that we're doing their job for them. We're collecting the money on their behalf, right? And so how do they do that? Well, we have to give them informational returns similar to a Form 1040. So in other words, normally we're used to a Form 1040 with an income tax system in the United States, where we don't actually pay the taxes at the end of the year, at April 15th of the following year when we file the tax return, but instead the government wants the money during the year, right? So in a perfect system for income taxes, what would happen is we pay the government, or they just take the money out of our wages by leveraging their influence on the employer, right? and they just take the money out of the wages. And then when you file the tax return on April 15th following that year, ideally, we wouldn't have any refund and we wouldn't have anything due, meaning we would pay the exact amount during the year. But because income taxes are so complex, that's impossible. So what do? We shoot for a refund. Why do we shoot for a refund? Because if we overshoot, then the government gives us some of it back. That's what the refund is supposed to be. But if we undershoot, what happens? They hit us with penalties and interest. So we try to overshoot a little bit so that the government is happy. We give them a little loan for a little bit of time, and so they're cool with that, and then they give us basically a refund. So with payroll taxes, similarly, we have informational returns, but we have to file those informational returns not on a yearly basis. They make us do it quarterly. So we break the year into quarters, 3-month time frames, and then at the end of the quarter, I've got to file normally, a Form 941. And that's basically just summarizing the Social Security, the Medicare, and the federal income taxes that we hopefully have already taken out of the employee wages and incurred our employer portion, so that we could just say, look, IRS, this is how much the earnings were subject to these taxes. Here's the tax calculation, just like we would do with income taxes. And here's how much we already paid you. However, we're not going to shoot for a refund in this case. We're going to pay the exact amount that we owe, because it's more easy for us to do that because we have more of a flat tax kind of system. So in other words, we do a similar process as reporting the Form 1040 in April following the year. But in this case, we have to do it usually quarterly following each quarter. And instead of shooting for a refund, we should be exact. Hopefully, if everything goes right, it'll be exact. So we have to do those 940s quarterly. And then we have to do the 941 at the end of the year, which is the FUTA tax, federal unemployment tax. So that'll summarize the whole thing. And then we also have to issue the W-2 forms, not only to the employees, but the government. And remember, that's what the government is really after. They're after you being the enforcement arm for the government, collecting the taxes instead of them having to do it. And they want you to rat out the employees, give that information to the government so that the government knows how much the employees earn, so they can go after them for the taxes. And if that W-2 is wrong, they can go after you. Again, why do they have the leverage over the employer? Because the employer wants the deduction of payroll. So do you want the deduction of payroll on your federal income taxes, employer? Yes, we do. That's a big deduction. Okay, then you have to do this A, B, C, D. You have to withhold and do all this kind of stuff. That's the leverage. That's how it kind of works. All right. So then we have to also have a W-3 at the end of the year. So that's the full process. Now, again, if you do this within QuickBooks, then QuickBooks will help us to generate all the information, but it'll result in a lot more detailed stuff within QuickBooks, and it'll result in forcing us to do this accrual component. Why is that the case? Because when we pay the employees, notice that even if I don't give them a check stub, I have to give them some kind of information electronically, usually these days, to inform them of the withholdings. So that means that I have to give them something equivalent to the old check stub that we used to get, which is going to tell them paycheck by paycheck, this is how much that you earned. This is what we took out of your paycheck, at least Social Security, Medicare, federal income taxes, possibly then state taxes and any other withholdings. This is how much we're paying you after we took all that money out. And we also need to report that on a yearly basis. That means that we have to have all that information for each employee on a check-by-check basis and a year-by-year basis, which gets to be somewhat tedious. That's a lot of data that we have to have within the QuickBooks system. And then we also have to use that to compile, again, the 941s on a quarterly basis, the 940 at the end of the year, the W-2s, and the W-3s. Also, it's going to complicate our system when we get into the bank feeds over here. So if we go into bank feeds, note that like in an ideal scenario, you would just pay your employees like you would any other vendor, and you would just say, I'm gonna pay you an electronic transfer, maybe wait till it clears the bank, and then just record it when it clears the bank. But you can't do that with bank feeds if you're processing payroll within QuickBooks, because you have to process the payroll check before it goes through the bank feeds, because there's this accrual component which is going to put the withholdings on the books as a liability. So it's going to mess up our automation process to be on a cash-based system. All right, what's your other option? It's possible, possibly, to still be on a cash-based system, but pick up clients with payroll if you have a good network. How would that work? Well, you could say, hey, look, I'm not going to buy payroll in QuickBooks, but I'm going to work with a payroll provider outside of QuickBooks that deals with the payroll. They're going to process all the payroll within their system, and they're going to deal with the payroll check stubs that they have to give out. They're going to deal with any laws and regulations for whatever and so on, possibly helping with human resources. They're going to do the 941s, the 940, and the W-2s and the W-3s and all that stuff. And then they'll pay the employees and pay the liabilities. And after they pay them, maybe I just wait till they clear the bank, right? I could just wait till they clear the bank and record all of those on a cash-based system as the bookkeeper, as say payroll expense. And then at the end of the year, I'm going to work with a CPA firm or accountant. You need someone that's somewhat sophisticated that can deal with the shoring up of the payroll. And I'm going to give them and say, hey, look, I've been recording payroll just on a cash-based system as I pay it. The payroll provider helped us to generate payroll, and they have given us the 941s, the 940, the W-2s, the W-3s. Here is that information. Here's the QuickBooks file. What I would like you to do for tax preparation purposes is make any period end adjustments that need to be made to put the proper payroll liability on the book, to break out the payroll taxes versus payroll expenses if needed for tax preparation, and to make sure that what we're reporting on the income taxes for our business, possibly on a Schedule C or other kind of tax return, ties into what was reported by the payroll provider with the W-2s, the W-3s, and the 940s and the 941s. Because remember, the IRS has both. I mean, the government at least has both of those things. They have what you gave them for the W-2s that you pay the employees, and they have your Schedule C or whatever your income tax reporting is for the business. So whatever you expensed for wages, you should be able to reconcile to the wages calculation and payroll taxes for that you pay the employees and reported on the W-2s, the 940s and 941s. If you can't do that, then in an audit you could be in trouble, right? So you tell the CPA firm, reconcile those, make any period end adjustments we need to do, and that, although it needs a system, a network to do, could work quite well, because then everybody can do their own thing. You can do things on a bookkeeping automated. You could still take on clients that deal with payroll. You can work with the payroll provider that deals with all the headaches of the payroll, that doesn't muddy up the QuickBooks system and force us into an accrual thing. And you have your CPA firm or tax preparer that knows how payroll works. Many tax preparers may not, unless they have to study. That's somewhat of a but they can shore up at the end of the year, making sure that you break out the proper adjusting entries for payroll at year end and showing everything to reconcile properly so that you are ready in the event of an audit to defend yourself. So that's the general idea.